Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, global stock markets continued their V-shaped recovery last month. Locally, the ASX 200 gained more than 2.5% over May and is around 1.5% off its all-time high. This is how Gary Glover from Novus Capital is interpreting the chart action.
Yeah, well, we've seen a pretty explosive move out of that low. I guess if we go back and look historically there, when the XJO and even the US market has a bounce this strong, we don't normally give it up straight away or sort of quickly. The last couple there, if we look at that October 22 low there, we had a little pullback before it went higher, but normally you're more likely to sort of grind it out higher there, sort of similar to what happened in October 23. So, again, we came out of the gates in October 23, had a really strong move and then had that slow grind higher here. So look, I think the easy money has been made. Might be a little harder to make it here in the next month or two, but more than likely here, we're probably going to grind slightly higher here, just at I guess, on an upward trajectory there, but probably just a little harder to come by here. So you might get a little bit of choppiness there, but I think we're going to grind higher. And I think post-election is normally the sweet spot, sort of April through to August. So that looks on track this year.
Well, a stock that's been leading from the front on the ASX is the largest, the Commonwealth Bank. David Novak from Wealthwise Education looks at the stock's technicals.
It's had an unbelievable rally here from the April lows of 140 to the recent highs of 176. Quite extraordinary. And at this stage, you can see they've got the volume bars there. The volume's tapering off. In other words, there's a lack of buying and selling here, especially selling. That's for sure. So you can see that black line there. That's the 168 level. So I would expect that. I wouldn't be surprised CBA pulls back to that 168 support level, but geez, it's had such a big rally, and being the biggest stock, that'll determine, and with the banks, that'll determine which way the market goes. So I just wanted to reflect, this is the biggest stock in our market by market cap, and you can see it's also reflecting a slowdown in momentum here. So I wouldn't be surprised if there's some profit taking at the moment, and you can see that indicates the RSI is overbought as well. But boy, this has had one heck of a rally. And yeah, very few sellers have been, they've been holding on. But I would say that at this point might be a good time to take some profits.
Let's now look at commodities. And oil prices have been under tremendous pressure this year, but have shown of recovery in the most recent sessions. But what role is the US dollar having on crude prices? Well, Carly Garner from DeCarlyTrading.com examines the correlation.
A lot of people are trying to kind of associate the weakness in the dollar that we've seen over the last couple of months as a reason to be bullish oil. But I don't think that that's how it's going to work. There's a couple weird things going on in oil. If you look at the relationship between the dollar and oil over the last 20-something years, it has almost always been negatively correlated. That means when the US dollar is higher, oil prices are lower and vice versa. That all changed when Russia invaded Ukraine in 2022. The market dysfunction that came with that, the inflation, all the other things that occurred at that time caused crude oil and the US dollar to move together. Basically, they were correlated, moving the same direction. And that is historically unusual. I think we're in the process of reverting back to a negative correlation. And the reason I think that is if I look at the data over the last, let's say, 7 to 9 months, it looks like the dollar and the crude oil market are correlated about 70% of the time. But if I look at the data over the last 30 days, there really is no correlation at all. This tells me that if we look at the data again in, let's say, 30 or 60 days, I think that correlation is going to go back to a negative relationship. So again, I think we're going back into a normalized period where a higher dollar equates to lower crude oil.
And that's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.